Hello and welcome to another episode of the Mark Moss Show, where we talk about the decentralized revolution. We talk about the way the world is moving from centralization to decentralization through the lens of the politics, finance, and technology. 3 cycles that are converging right now. Of course, the world changes the most because of technology, and we are witnessing a technological revolution. It's hard to see it sometimes when you're zoomed in too much, and so sometimes you have to kind of zoom out and take a look at it. And so I try to bring you that information each and every week. And right now we're going to look at some of the biggest headlines of the week, so you know what's going on in the world. So, you know, when you go to that cocktail party this weekend, you look like you're super smart because you know everything. But don't worry, I'm just over here filling you in. I'm going to give you that and the context around it so you can understand it. And it has been a busy week. Now, obviously, the technology that is changing the world is Bitcoin. It's the decentralized revolution. It is the technological revolution. We have about a technological revolution about every 50 years. Now, when it comes to Bitcoin, you know by now, if you tune in on a regular basis, which you should be, and if you're not, then you definitely should. But you know by now, we talk about the price is probably one of the least interesting things about Bitcoin. When you're looking at new technologies, you should be looking at the growth of the network, and you should be looking at the development on the network. So I typically like to focus on those things, but you know, people care about the price as well, and so sometimes I like to talk about that. And I've made the last couple of weeks I've been talking about, you know, how all of these purges in the Bitcoin ecosystem through the, you know, Terra Luna collapsing and Celsius and Three Arrows Capital. And we've covered all that at length. But I also started talking about how at these certain levels that Bitcoin starts to become very cheap, and how at these levels it becomes a historic buying opportunity. As a matter of fact, I put a video up on my YouTube channel. If you're not watching that, you should. Just search Mark Moss on YouTube. And I had a video full of charts and graphs and stats and numbers and everything showing why I thought it was the Bitcoin bottom. And it looks like that might be the case. So we hit a Bitcoin, well, the lowest point we've had recently was about 17,600. And today we are up to over 23,000. So that is a 31% increase. Since, what was the date on that? June 19th. So about a month ago. We've done pretty good, 30% in a month. So a lot of times people like to ask me, oh, how's that Bitcoin doing for you? And they ask that sarcastically because they know, right? It was 60, whatever. If you want to look at the wick of the high point, you know, we were up somewhere in the 69,000 range. Back in November, there was a little wick up to just over 69,000 back November 11th. And so obviously it's down since that point. And so everybody goes, oh, how's that Bitcoin doing? Huh? It's some store of value, isn't it? And I would say, well, yeah, how is Bitcoin doing? How is Bitcoin doing? Well, let's see. It's down 50% year to date. How's that compared to Netflix or PayPal or Shopify? Right, so it's much better than those. Thanks for asking, right? Or I could say, well, it's up 30% in the last 30 days. Right? So what time frame do you want to look at it? How's that Bitcoin doing? Well, let's see. Since you know, in the last 2 weeks, it's up 28%. Thanks for asking. Yeah, but it's down 65% from its all-time high. Okay, but it's also up 450% in the last 24 months. So we can sit here and we can cherry pick any dates and timeframes that we want. And that's why the price is one of the least interesting things. What we want to look at is the development and the growth of the network. The network growth is everything. Now, but anyway, that's the price. So we can see because the price of Bitcoin has rebounded, we are now at about 65% off of its all-time high. Now, it had drawn down even more than that, and it's a little bit important to understand for a little bit of reason. So it had gotten as low as 74% off of its high. So it was down to 64%. Now it's about 66% down. The reason why it's important to understand that maybe is as I made this video on my main YouTube channel, Mark Moss, and I showed these charts and graphs and things like that. And one of the things that we look at is how far is the drawdown. So what we see is that Bitcoin had a 95% drawdown, and then an 85% drawdown, and then an 80%, and then it's, you know, and each drawdown gets less and less and less. And so yes, we had a 74% drawdown, but That was much less than the ones before that. And the reason why that's important is that they're getting less and less and less. As the asset gets older and bigger and more developed and more users, it gets less, has less drawdowns, it gets less volatile. And so that's what we're seeing. And so it's important to understand it from that perspective. Nobody has a crystal ball. I wish I did. It would sure make things easier, and I would probably be the richest guy in the history of the world, but of course nobody does. And so we look at a bunch of charts, graphs, and things like that to try to come up with what we think are probabilities. And then we invest along with those probabilities. And so I see a lot of linear thinking in the space, and it's like, I would never buy Bitcoin, it's going to zero. And I'm like 100%, you're guaranteed 100% it's going to zero. Or some people would say, Bitcoin's going to be $1 trillion. And it's like 100% guaranteed, right? Like, no, it could go to zero. I will agree with you. It's possible it could go to zero. But what's the probability? What percentage chance would you give it of going to zero? It could go to $1 trillion. But what probability would I assign of it going to $1 trillion? So you have to think about it in terms like that. Now, I've worked through the math. I'm not going to go through this. But I think that Bitcoin could achieve easily a $2 million per Bitcoin price. At today's $20,000 valuation, that means the market gives it about a 1% chance of getting there. Well, I think it's higher than 1%. So I think the market's misjudged it. And so that's the way I think through this. But like I said, it doesn't stop people from trying to think through this. And we have all different types of analysts. Some are still calling it for it to go to $10,000. It hasn't gone to the bottom yet. And some are saying it's going straight up to $125,000. But of course, we don't know that. One thing we do know is that we can just see how it's moved against other assets like the US dollar index, the DXY. And it's been sort of inversely correlated. What does inversely correlated means? Well, that means that it does the opposite, right? That's the best way to think about that. And so as the dollar's been getting stronger, most risk assets, including the NASDAQ, et cetera, have gotten weaker. And what we can see is that the dollar index has dropped off quite a bit. From July 14th, we're down about 2%, which doesn't sound like a lot, but the dollar index doesn't move a whole lot. So maybe the dollar index moving down has a big effect on Bitcoin, as it says it does. I mean, that's what people are speculating, and sure enough, we can see the dollar index has come down off of that. We can see that also, though, that risk assets. So when I talk about risk assets, I'm talking about both like, the NASDAQ, which are tech stocks, and I'm thinking about Bitcoin. They also tend to move in front of traditional assets like the S&P 500. So when the Fed announced that they were going to start raising rates and start tapering, Bitcoin and the NASDAQ, the tech stocks, sold off right away in November. But the S&P 500 didn't make its high until January. So maybe both with the dollar index going down, but then more specifically with the NASDAQ and Bitcoin both catching a pump, maybe that's telling us something. Maybe that is this canary in the coal mine, so to speak, because the NASDAQ also made its low about 2 months ago, and the NASDAQ is up 20%. So the NASDAQ, the risk assets, the tech stocks, they're up 20%. Bitcoin's up 30%. It's more volatile, so it moves faster. So we're seeing both risk assets being the NASDAQ and Bitcoin both pumping. Meanwhile, the S&P 500 is doing okay. It's up almost 9% in that same time period. But we don't know. So far, it's up 30%. I think we might have seen the bottom of Bitcoin. I think it could continue higher from here. Probably not going to the moon overnight, but I think it's a good entry anytime we get around these price levels, and so far it's holding up. And, there's a lot that catches my eye on a weekly basis. There's definitely no shortage of news out there. And as I've said before many times, with new technologies, we don't look at the price. We don't want to look at the price. That's boring. We want to look at the development and the growth of the network. Now, we've talked extensively about the growth of the network, the amount of wallet addresses that are opening up, the hash power on the network, things like that. But I also like to look at the development on the network. And there is no shortage of development that's happening on top of Bitcoin. about 2 months ago, I think it was, or maybe it was a month ago. I'm losing track of time. Maybe it was about a month ago in Austin was Consensus. It's like the largest crypto conference. And Jack Dorsey, who's the founder of Twitter, he left Twitter to run his company Block, which is a Bitcoin company. He said he's going to spend dedicate the rest of his life to working on Bitcoin. I suppose he could change his mind, but that's what he said. Anyway, he made buzz by announcing what he called Web 5. It's kind of like this meme. But basically announced this new company he's working on that has these things called decentralized IDs. So what that means is that we all have an ID. You have your driver's license. When you go to the bar or you go buy alcohol at the grocery store, for example, they want to see your ID. What they really want is they want to know if you're over 21. They want to know if you're legally able to buy that alcohol. They don't need to know your birth date. They don't need to know your address. They don't need to know any of that. The only thing they need to know is if you're over 21. Now, the part of a decentralized ID is that I can own my ID. What's happened when we got on the internet is we've exposed even more of our personal data. So, for example, what we saw with Web 2 is that I could start logging into websites with my Google ID or my Facebook ID, for example. Now, that's nice. That's convenient. It sure is a pain in the butt having to create user profiles on every single website you go to. I hate it. What do they need all this information for? Can't I just use the stupid website, right? So it's a pain in the butt. You have to make different user accounts, different passwords. By the way, always use a unique hard password for everything. It's super hard to keep track of it, so I use something called LastPass. It's not a sponsorship. I don't get paid by them, but I use it, LastPass, and it creates a new hard password for everything, and I can log in with my phone or my computer, whatever. Anyway, so I can log in with my Facebook or my Google ID, but then they give them all that data, and I don't own that ID. Google owns that ID. Facebook owns that ID. So back to this announcement. So Jack Dorsey's company has these decentralized IDs, and that means that I could own my ID. And I keep my ID, and then if I want to log in, I want to show you my ID, I would only show you the information that you're requesting. So back to this proverbial buying alcohol at the grocery store. Instead of handing you my ID, where you can see my address and my birth date and all those things, the only thing you're seeing is if I'm over 21. And I can control that. The other benefit of that is that when I own that ID, it references to me. So let's say, for example, if I want to move, I got to go change my mailing address. And I got to notify all these people of all my new address. But what if I just changed it in my own ID? And then when people mailed stuff to me, they just queried my ID, or they automatically got updated. I could control that. See, right now I have to update everybody because in their databases, my ID is in thousands of databases. I have to go update thousands of databases. But they could just query my one database and I could own it. That way, if let's say Twitter shut me off, well, all of that information that Twitter had on me, I owned it. So then I could just go to a different platform, plug it in, and I can have everything back. So for example, if I log into Netflix and you log into Netflix, we see different things, right? Because Netflix has learned like my taste and it's learned your taste. And let's say that I leave Netflix and go to a different competitor. Well, then I have to start all over and I have to like stuff and dislike stuff. And eventually it builds that profile. But what if I could take that whole profile with me? And that's what I'm talking about. Now, why am I telling you this whole story? Well, I'm telling you this whole story because for this decentralized ID to work, they need to take that ID and they take a hash and they need to hash it somewhere that it's secure and decentralized, and it can't be manipulated or deleted. And so they're putting that into the Bitcoin blockchain. Now, what the heck is Bitcoin? Well, Bitcoin's a lot of things. We don't know everything it's going to be yet. What we do know is it's a new set of building blocks that allows us to build new things on top of. Now, we don't know what those new things are that it's going to be built on top of. Just like when steel was invented, steel was a technological revolution. We didn't know that one day spaceships would be built using steel. But we knew that we had a new set of building blocks that new things could be built on. And so here we are. Now we have another one being built today. And this one this week was announced. It's called FEDI. And it's a FEDI. And they're hoping to really help Bitcoin adoption throughout the world. And they enable people around the world to easily interact with and use Bitcoin in a decentralized, private, and simple way. So a lot of people, gripe about Bitcoin. They say it's too complicated. It's too hard to use. It's too complex to secure. It's too hard to secure, in a business where multiple people need to access it, all these different types of things. And so, I guess those are fair techniques or critiques. Whenever there's a new technology that comes out, it's often clunky. If you were around in the early 90s trying to get on the internet, you know what I mean. Remember your computer going like trying to connect over the telephone. It's very difficult, it's very slow, it's very clunky, but things get better over time. And that's exactly what we're seeing with Bitcoin. And this is one of the things, that's why we focus on the development. And that's one of the things that happened, like I said, with these DIDs that Jack's working on, and also like we can see with this right here, with this FEDI. Now, basically what it's doing is allowing for an easier way to manage your custody. So like I said, it's one of the big challenges to custody, and it's intimidating for people to do it on their own. They don't want to mess it up, right? And so what happens with FEDI is it's a new form of Bitcoin custody. I'm not going to go deep into this, but it utilizes federations, which is like a type of a multi-signature technology. So that means multiple people could have access, where you have to have all the keys together. And it can be run collectively by groups or guardians. So think about companies or communities or nonprofits and things like that. And so this way, like a community could manage it together instead of just one guy having access to the key. And if he dies or if he runs away with it, we lose everything. I don't want to go super deep into it because it's pretty technical, but this is a massive improvement on self-custody, especially when it comes to groups and communities and companies. And again, we don't want to look at the price. We want to look at the growth of the network, and we want to look at the development on the network, and that's exactly what we have going on. And as the network continues to grow, as new technologies like this continue to take hold, then we're going to see more and more adoption. So they kind of work together. As we get more development, then we get more network growth. And as we get more network growth, guess what happens to the Bitcoin price? That's right, it goes up. We call it NGU, number go up technology. Sometimes the number go down, but hopefully we'll get back onto a number go up thing. But regardless of what happens to the price, the network still works and it still does what it wants to do. But anyway, that's what we're looking at, new development. I got a lot more to talk about when it comes to development and some of the risks that we've seen in the system and how you can protect yourself from it. I've been going through every week talking about the devastation that's happened across the cryptocurrency ecosystem. That really was this domino effect with Luna going down, and then it triggered a whole bunch of other collapses, including Celsius, including Three Arrows Capital, including a bunch of other smaller ones, Voyager, and on and on and on. It created complete havoc. And what happened is each one of these had exposure to each other. And so as one went down, it dragged the other one down, it dragged the other one down, it dragged the other one down. I've gone through this extensively over the last couple of weeks, so I don't want to spend a lot of time going through that. If you've missed any of that, you want to catch up and understand my viewpoint on it, you can check me out on the podcast. Just search Mark Moss Podcast. Or you can just go onto the iHeart app or the iTunes app, and you can find me on there. Now, some of the big news this week has been, is there going to be more liquidations in front of us? Is the contagion going to continue to spread and bring down even more companies? Or have we seen about the worst of it? Now, one of the biggest companies in the cryptocurrency space is Coinbase. Coinbase is not one of the most loved companies when it comes to the Bitcoiners. Partly because as a Bitcoin company, they quickly went into a crypto company. But I'm not going to deny the fact that they've onboarded countless people, including me. I believe the very first place I ever bought Bitcoin was at Coinbase. So they brought a lot of people into the space. Now, like I said, people hate Coinbase for many reasons, specifically because they get into all these crypto assets and kind of bait and switch people into these coins. But there's been an enormous amount of FUD coming out in the last week. We call that FUD, fear, uncertainty, and doubt. And we typically call that people are saying things, speculating that there could be danger, they could blow up. And they're spreading FUD. They're spreading fear, spreading uncertainty, spreading doubt. And as all of these companies started going down, there started to be a lot of noise over the last week that Coinbase was going to go down. Now, for those of you that don't know about Coinbase, they went public. They're one of the first publicly traded, cryptocurrency companies, and they went public back in April of 21. And the day they went public, just like most publicly traded companies, the stock shot up higher. As a matter of fact, it jumped up on opening day somewhere about 30, almost 40% in a day. But then it promptly fell, which is exactly what happens, which is exactly why the SEC shouldn't be blocking unaccredited investors from getting into early round deals, because all they do is open themselves up, open up investors to get dumped on. But since then, coin has not done that well. We're talking about Coinbase. It made its local high in November, which is the exact same time that Bitcoin made its high, which is the exact same time that the NASDAQ made its high, and other risk-on assets. And from that point, it fell like a rock. And as a matter of fact, it reached a low point in May 12th, and it was down about 89%, a 90% drop. Not since IPO, but since that high set in November, almost a 90% drop. And so it's no wonder that a lot of people thought it would go dead, never mind the fact that it had raised all this money. And specifically when it came to because of this contagion that was in the industry. Now, the one thing that's different from Coin versus all of these other companies that are out there is that they're publicly traded. And the reason why that's different is because a publicly traded company has to file disclosures. They have to open up the books. They have to show the numbers. And sure, they could lie about them. But if they lie about them, there's some serious, serious consequences for doing so. And so typically we would look at this public data and we could see some of that. But what we saw is that people were speculating that Coinbase was going to go bust because of this and people would lose a lot of money. Now, a couple things about that. So if you look at the data, the publicly available data, it doesn't look like they're insolvent at all. Whereas like with Celsius, it looks like some of the early bankruptcy proceedings are showing they had somewhere between a $1 to $2 billion hole, meaning they were short. They didn't have it. They owed $2 billion they didn't have. That's a giant hole. It's a very big hole, but from Coinbase's public data, they don't show that on there. But they came out this week and made some noise and said, hey, look, they had no financing exposure to the crypto lender Celsius Network, the hedge fund Three Arrows Capital, or the crypto broker Voyager Digital. That's what they put up on their blog on Wednesday. And they said all three of those companies are facing bankruptcy, and they all had exposure to each other, which is why they all went down. But we didn't have that. They said, quote, we have not engaged in these types of risky lending practices and instead have focused on building our financing business with prudence and deliberate focus on the client, which is pretty good. So I know there's a lot of FUD being spread, and there's probably a lot of fear. Now, I do want to say right off the bat, one, I don't care how transparent, I don't care how many disclosures, I don't care how solvent they are. Do not store your coins on the exchange. Take your coins off the exchange, period. That's it. The revolution that Bitcoin solved is that I can custody my assets. I don't have to trust a third party. And so you should do that. Take them off and custody them on your own. How do you do that? Well, you can go onto your iTunes store, your app store, and you can download any wallet in here. You can find like a Moon wallet is very good, MUUN, a Blue wallet. There's many of those that you can do. And you can download it into your phone. I would recommend that you don't store your life savings in your phone app. A much better way to do that would be get a hardware wallet, one like Trezor. You can go to Trezor, Trezor.io, Ledger. Those work good. If you want to get a little bit more security for your Bitcoin, you can think Cold Card. And so that would be like the next step up. They're like a little device that can hold your private key. And you can go onto their website. They have all the videos to walk you through how to do it step by step by step. It's not that hard. You just have to try it. You can figure it out. Now, if you have more money and you want to secure it even better, then the next best option would be to use a multi-signature wallet system like I use. And you can set that up on your own. You can download a software like Spectre, and then you can set it up with your own hardware wallets like the Trezors or the Ledgers or the cold cards, or you can use a company like I use, like Unchained Capital, and they have a concierge service. They can set that up for you. You can go to unchained.com/concierge, check that out. But I wanted to squash this, stop the FUD on the industry. I don't think Coinbase is going down, as they've said. Now, they did say that this is a major inflection point for the industry. Notably, the issues here were foreseeable and actually credit-specific, not crypto-specific. So it was this leverage I kept talking about, which is why I've been calling it this great unwind. They did not have any counterparty exposure to those firms, as they said, but it didn't stop their stock from completely getting crushed. Now, like most of the crypto industry and the risk on assets, it is up 85% in the last 2 months. 85% in the last 2 months. So it's doing good. But again, do not store your Bitcoin on the exchange. I don't care where you buy it, you pull it off. Now, if you want to buy it from somewhere, use Swan Bitcoin. That's where I like to use. And they have a service where you can set up reoccurring buys, like $5 a week or $50 a week, whatever you want. And then when you buy it, it automatically sends it to your cold storage for you, your hardware wallet. So you don't even need to do anything. Automatically buys, and it automatically goes into your cold storage. So you don't mess anything up. You can check out Swan Bitcoin. I think you get $10 if you use code /Mark. You can check that out if you want. Hello, and welcome back. You're listening to the Mark Moss Show. We're talking about the decentralized revolution, of course. What else would we be talking about? Now, what the heck does that even mean, decentralized revolution? Well, don't worry. I got your back. I recorded a whole episode explaining what the decentralized revolution was, and you can check it out. Just search Mark Moss Podcast on the iHeart Radio app or your favorite player, wherever you want. And I did a whole episode on that decentralized revolution. You can also find it on my YouTube channel called Market Disruptors. You go to Market Disruptors on YouTube, and we also put the episode on there as well. So I break that all down so you can understand what it means. But basically, the peak centralization, the IMF, the UN, the WEF, the WTO, the WHO, peak centralization is all breaking apart, right? We got protests in China. We got protests all throughout Europe and Holland and Poland and Germany. We got protests in you name it. It's breaking apart. But back to the news. We're talking about some of the biggest breaking news this week. And one of these pieces of news that really caught my eye is about El Salvador. Now, El Salvador is unique for a bunch of reasons. So going back to this decentralized revolution, you know, gold has been money for 5,000 years, but the dollar has been the reserve currency of the world for about 100 years. And of course, the dollar left the gold standard about 50 years ago. So the dollar is the reserve currency of the world. And, reserve currencies change, and it looks like the dollar's role as the reserve currency of the world is failing, it's falling, and potentially there will be another reserve currency of the world. At least that's what people think and people want. I do believe that the role of the dollar is falling, and it's not that I believe it. That's what the stats show us. But everybody's wanting to know what the next reserve currency of the world will be. Well, it was the pound sterling before the dollar. Now it's the dollar. What comes next? Will we go to like a IMF SDR? Will the Chinese yuan take over? Could we go back to gold? Will it be Bitcoin? What's the next reserve asset? But the problem with that is that they're looking for a centralized answer. They're looking for someone on high to come down and declare that this is the new reserve asset of the world. And I don't think that's going to happen. First of all, nations hold lots of things in reserve. So look at Russia, for example. When Russia's FX reserves accounts got seized, they were holding lots of currencies, not just the dollar. We know central banks and nations around the world are stockpiling gold, so they're reserving assets in gold. Russia had huge gold reserves. They also have huge reserves of oil and natural gas. So they have reserves in lots of things, not just dollars. And I believe that only continues. Like I said, we can see the data. The dollar's already been losing its role as that reserve currency. And of course, who wants to hold it when they can just click a button and take it from you? But what I think is that as the world becomes more decentralized, different people will use different things. So for example, I already store most of my wealth in Bitcoin. I know there's S&P 500 companies, publicly traded companies like MicroStrategy that use Bitcoin as their reserve. And there's even nations like El Salvador. And that brings us to El Salvador. El Salvador was the first nation to make Bitcoin legal tender, meaning you could use it throughout the nation to buy and sell whatever goods you want. That means you can go to Walmart. Well, I don't know if they have Walmart, but they do have McDonald's. They do have Starbucks, and you can go there and spend your Bitcoin there. You can spend it at the papusa stand or wherever you want in that country. I've done it. I've been there. As a matter of fact, I have a whole video about my experience in El Salvador, a little documentary we put up. You should go to my main YouTube channel, just search Mark Moss El Salvador. I'm sure you'll find it. It's a pretty cool video. You can see a lot about the country, some of the beautiful people, what the beaches, the surf look like, and so much more. So check out that video if you want. So it's kind of a place that's near and dear to my heart. I've been going there for a long time because the waves are awesome there. And now, of course, they have Bitcoin Beach, which is the very first Bitcoin community. And the Bitcoin community is so awesome that it continued to grow outward until finally the president took notice and said, wait, what's going on over there? Oh, Bitcoin? Maybe we should bring that to the whole country. And they did. The problem is that the central bankers of the world, they don't really like that very much. And so the IMF, which is sort of a central bank of central banks that basically loans money to all these countries with, of course, a lot of strings, they don't like that either. And so the IMF has been pressuring El Salvador. The United States is trying to crack down on El Salvador. And everybody's trying to crack down on El Salvador to get them to give up their Bitcoin position. Now, they bought a bunch of Bitcoin. The price dropped. And they kind of looked like a laughing stock for a lot of people. And their credit ratings got dropped down. I mean, it was a world of hurt for them. Now, I would say that the good news is that with the price rebounding, I think El Salvador bought most of their Bitcoin in like the $40,000 price range. So maybe they're down. And I know they bought more. It's what we call dollar cost average. So they also bought more on the way down. I didn't go through and do the calculations for you ahead of time. But maybe their blended cost is in the 30,000 range. And so Bitcoin's back up to like almost 24,000. So maybe they're not that far off today. But a lot of people, I think that's a very bad position for them. Like I said, their credit ratings were downgraded. And so just like every country, El Salvador still needs to borrow money. They still need to issue bonds. And the IMF is like, well, maybe we're not going to give you any more money. So they said, fine, then we'll do our own bond. How's that? We'll do a Bitcoin bond. And so they've been trying to get their Bitcoin bond, and they're really trying to get things going their own way. Now, I had Peter Zion on my channel this last weekend. Great conversation. If you want to know more about the decentralized revolution, check out that conversation I did with Peter. But we talked about Bitcoin. He's not a fan. And he said, oh, it can't be used as a currency. No one can use it to buy or sell anything. I said, well, I've been to El Salvador and I've bought many things with it. What do you mean it can't be used like that? I've done it. And he said, hang on. I'd be very careful. Don't use El Salvador as your case study. But I said, look, El Salvador is one of the poorest nations in the world before they adopted Bitcoin. It's not like instantly that's going to solve all their problems. Like let's separate the wheat from the chaff here. But anyway, back to the story. So Morgan Stanley, one of the largest financial institutions in the United States, encourages investors to buy El Salvador Eurobonds. That's pretty interesting. It said the banking giant estimated that El Salvador wouldn't face any issues with its debt payment for at least another year, despite the crisis it's facing currently. So it says that the Bitcoin bet has somewhat backfired because it's down from where it originally was. So it's somewhat backfired. They thought it'd be worth more. Right now, it's worth less. But it said that Morgan Stanley told investors Tuesday that a note that El Salvador's bonds are overly punished by the market conditions, despite the country having better financial metrics than many of its peers. Wow, that's interesting. It says markets are clearly pricing in a high probability of the autarky scenario in which El Salvador defaults, but there is no restructuring. So the market's pricing in that they're about to crash, but Morgan Stanley says that's not the case. They're actually pretty well, they're actually better than many of its peers, as it says right here. The country's debt shouldn't trade lower than 43 cents on the dollar, even in cases of default. One of the reasons why it says that it's doing better than most of its other nations is it actually has a lot of assets. That's interesting. What kind of assets? Oh yeah, that Bitcoin. That's not a liability to anybody else. That doesn't have counterparty risk. And that is a liquid asset. It says the country has purchased nearly $56 million worth of Bitcoin since September and even used the profits to build schools and hospitals. pretty good. It says, however, the country lost a significant chunk of its investment once the bear market set in. It didn't lose it. The US dollar valuation of it went down. The Bitcoin is still there. It's a big difference. It's a big difference. It says the Bitcoin bond has seen delays and there's no concrete date for launch. So they wanted to wait for the Bitcoin bond launch until the price of Bitcoin came back up. So they're on hold with that. But anyway, Peter Zion said, don't count Bitcoin. Don't count on El Salvador. They're horrible. They're being punished in the market, even though they're better than most of their peers per Bloomberg and Morgan Stanley here. And part of the reason is because they have a bunch of assets, $56 million worth of Bitcoin on their books, which is pretty amazing. You're listening to the Mark Moss Show. We're talking about the decentralized revolution, talking about the way the world is breaking up and how nation states will decide to change their reserve asset and other nations will choose other assets. At the end of the day, what you choose to store your wealth in matters. And El Salvador's chosen Bitcoin for the most part. Anyway, you listen to the Mark Moss Show. Thanks so much for listening. Until next time, I'll see you then. Since you've stayed to the end, I know you like this video, which means you're probably going to really like this video right here and this video right here.